Hello everyone, welcome to today's video on market analysis. This is for the May month. What is the outlook? We are going to analyze two indexes. One is Nifty and Bank Nifty. Before we get started into the analysis, I must say that we are in a very critical juncture. Market has been, making a lifetime high. Almost twice it got rejected at the lifetime high and then significantly came down. We are at close to the bottom of the trend. And a lot of people are asking whether there will be some sort of reversals from here or it's going to go down. So as we understand what might happen in the remaining days of May, let's take some time to see how the market has responded in the past and what are the kind of things that you should do in order to substantiate your analysis and to make wise trading decisions. So I have done some sort of past analysis and multiple time frames that I did, and then did a lot of analysis from the past where the market is likely to expect some sort of support and resistance. But these are very long time frame analysis, 1 week and 1 day time frames. So it might be of very little importance for now, as long as it is trading above this green zone. The things that is at the base doesn't make any sense. And when this would be of help, when the market really crashes and then comes down, say about 1000 points, 1500 points, then these levels gets activated. So until then, our main interest is to find out whether market will reverse or it will take a support at this level. So which means from here, either we can expect a fierce pullback or the market has still a lot more down moves to make. So let's try to figure that out. And I have kept this in 1 hour time frame. We are looking at Nifty index. We are at 1 hour time frame. And since January, you see this channel has been formed. Market has given a rally, got rejected, again went up, and it incidentally gets rejected every time that it gets rejected, and then it makes a new high, rejected, and then makes new high, and then the trend continues. We are yet to break this 23,000 mark. That has not yet happened. So what can be expected in current week and probably next 18 days or so? That's the main focus of this, because analyzing too deep into the time frame and then anticipating for June, July right now doesn't make any sense. To keep the attention to next 2 weeks makes good sense. So I'm going to zoom in, show that market has this channel, if you see, started off on 24th of June. This is where the trend started, and then it got rejected, came back again, lot of spikes, and it respected and then placed between this channel for almost 5 months now. And once it broke, then we cannot say that the trend has broken. Now it should go downside. Because it's in 1 hour time frame, we got to wait and observe. Since this channel is formed in 1 hour time frame and 1 day time frame as well, we got to check in longer time frame to get the real confirmation. If the market has made another red candle and then continue to go down, then that would have given us a good confirmation that market's trend is on the downside. But what happened within 3 hours of the trade, it entered into the zone, and as soon as it entered, it reached here and then got rejected. So the level where it got rejected is also the previous high. So almost around this 22,760 ranges, it gets rejected, right? And currently we are at 22,000. So 700 points down from the peak. Now we can look at this. If you see, again, it broke this channel, and then 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, almost 12 candles, which means that for 2 days it is trading below. Sir, does it mean that the trend is broken? Only Monday first 2 hours will give us the confirmation. If it is, continuing to make a newer low and continues to go like say 21,800 and then breaks, then we might have some confirmation. And till where we can expect between 22,530 to 22 to 21,580. That is the next level of target. I'm talking only positionally because I will not be able to do a video on daily basis to post the levels. I don't have time. But having said that, so this is too big a range, and what can we do on a daily basis? I will give certain levels, positional levels that I will be giving you. That you can map into your charts to keep as a reference and see how those levels are getting respected. All right. Let's see what are the scenarios possible. One is that a consolidation around this level for some more time and then a breakout happening on the upside, or consolidation and then breaking down, or a gap up and then coming down again, or gap down and then going up. These are the scenarios, right? So when do we have a trend confirmation? When we see this level being broken. When we see this level getting broken, that is 21,775. That would be one level that will confirm if we are on the downside or not. So this would be a good confirmation zone. Okay. Let me just drag this. Yeah, around 770. Yeah. So this would be one area. If the market comes and tests, then we are making newer lows and then it's stretching far away from the zone, indicating the bearishness. And in that case, we said, where can we expect the market to go? Then this is the zone. This would be the second level of target. So I'm going to map this as well. So that is around 21,570. What is this zone? If we go back, you see multiple times, this is the area where there was a gap passing through, you see, and then some sort of consolidation taking support, consolidation taking support. Multiple times this area has been a support zone. And when the market gave a breakout, this is the area where it got first rejected. So this is a very critical zone where the market makes important decision whether to stay here and take a support, or if it breaks fiercely, then the downside targets further extends to this zone over here, right? So the next level of targets, supposedly if this is broken, what can we expect? The next level of targets would be somewhere around here, which is after it breaks 527, we can expect it to go to 450, or maybe I can, if the levels are, you feel that it is too close, then I can keep the lower edge of the gap over here, because once the market breaks this, obviously there is a gap that market would attempt to fill. So I would keep this as my next level of positional target, and then obviously this would be the next band of target on the peak and also at the base. So what are the levels that we should know on the downside? Maybe we can take text box, put it over here, then write it down. 21,770, 21,527, 21,365, 21,136, and 21,20. So these are the 5 targets on the downside, right? So I think these are good levels. Sir, what happens if the market goes below this? Then we got to do a second level of study, and it won't be like falling straight to 21,000 tomorrow or in a couple of days. Although there are chances, but then very unlikely. If that happens, then I will post a new video. Until these levels are broken, this we will hold good. So I'm going to put down, this is downside target. All right. So we have arrived at the downside targets for this month. As long as these levels are broken, this holds true. Let's also try to find out the upside targets. For example, market may consolidate and then try to attempt to get into this zone, right? And where is the real gap? It is over here, and this is where the momentum took, and then you can see some sort of support over here. Lot of consolidation happening. So the band where the market is consolidating and taking support is one area that will be the first level of target that the market would try to reach. In that context, the target would be 22 to 25. Excellent. Now, okay, it enters in and it continues to go up till where I can expect it to go without major resistance. Then you can see again there is a gap over here. Here there is a gap and there is a zone of consolidation, again taking support, going back, and this is where the actual fall started. So this is a band at which you can expect. So to keep it more reliable, I will take almost over here. Yeah, this is good. So 22,467 would be the next level of target. All right. After that, if the trend continues to go on the upside, what can be expected? Here is the momentum candle. This is where the fall started. Again, you see that there's a couple of rejections at the peak, but then that is too far away. You wanted to keep some intermediate targets. Then you see consolidation zones over here, rejection here, and this would act as a strong area of rejection one more time. So I would keep this as my next stop. And once it clears, then probably the peak, we will have another. And since it has come to 22, almost 800 levels, the natural attempt would be 23K, which is the round figure. Market would like to keep that as the next level of target. So I would rather post it for the convenience, 23K, all right? So the upside targets, let me take and then duplicate. So the upside targets would be 22, 225, 22,467, 22,625, 22,796, or maybe round number I will keep it 800, and 23K, right? So these are the positional targets. And you can also see that the market is, particularly Nifty, is acting very weirdly because the volatility has increased and it is reacting very abruptly without any warnings or any sort of clue. It's suddenly spiking some 150 points rally in about 1 hour, 1.5 hours of time. So these levels are definitely good, and you can map these levels to your charts positionally, and whatever you are continuing to do, that you can continue for your intraday analysis. Probably, some of the things that you may want to do is Fibonacci retracement levels, and then to get more confirmation, if you see this base to the peak, there is an overlap. You see there is an overlap. This is a fantastic area of overlap. Then the intermediate targets that you can arrive at. Do multiple analysis with Fibonacci retracement and extension tools. If you know how to use them, please do feel free to add more intermediate levels for rejections and support. That will be of more value addition to reconfirm your intraday positions. I'm not going to dwell too much into the intermediate levels because our focus is to arrive at the positional levels in this market. If you continue to play on intraday basis, the chances of you to go wrong and then one wrong trade can wipe off a week's profit. So I have been constantly saying that if at all you got to stay profitable in this market, the only way is to go farther of expiries where the erosion is low And at the same time, even if there is a choppiness in the market for about 90 minutes or so, you will not be losing much of a premium. And when there is an actual trend continuing in your favor, you will be really in good profits. So instead of buying current week expiry and then investing so much into the averaging business and then losing big on a daily basis, go do your study, analyze, get into the trades where you are comfortable with, and positionally entering in and capturing, say, about 50 points or 80 points is good. It can really save you in terms of brokerage. It will save you in terms of your stress levels, and there is no unnecessary averaging required. So that's the analysis for Nifty. Now let's look at Bank Nifty. Bank Nifty almost has the same set of chart patterns. I'm going to enable the chart patterns here. Same date, January 24th, the rally began, and then you are seeing that it is breaking the channel on the lower side once it got broken down, but then the very next day it started going up. Again, we are here. Who knows, if there is a gap up, then it can continue the rally on the upside. Now, the next level of support is super far away, like almost 4,000 points away. So this is of no value for me right now. Yes, I do agree. But in a month, can it reach there? Possibly. Bearishness is such a powerful weapon that it can drag the market any stretch in no time, right? So these levels are there for me to. I cannot, after the crash happened, I cannot be drawing this. So this will be permanently on my charts. Okay. Now let's try to figure out what are the levels that it could possibly play in this month on both the sides. To arrive at that, we got to see that there is a gap, but there is again like 2,000 points away. Is there anything in between that we can do? Over here, you see there is a gap, and that gap was filled over here, and that is where it got rejected. I think this is one area where the market would pause for a moment to make decisions. So I'm going to draw this over here and say this is where the market would test. Still, you may say that that is almost like how many points? 400, 800 points away. Fine, this one level, all we got to do is to zoom in and see if we can pick up more cues in between, right? Now what happened here? You see, there is a fall and market has consolidated at this level. The fall started. Again, here it got rejected. Again, this acted as support. Again, the market is consolidating here. I would say this would be one area where the market would slow down to make decisions whether it is worth, going down further, or is it really, we have to reverse from here. Those sort of decisions used to happen. Right now, it is exactly over here. So we are already at the decision point, and the channel is here. So what happens in the next couple of hours tomorrow is going to be a huge critical factor. So for the target purpose, I don't think this makes any sense because we are already at that. So my next level of stoppage would be over here. So I'm dragging it here. This would be the area where the market would test. Why? You see, big fall, took support of the channel, got rejected over here exactly, came back, and then got, with the momentum, it went up. And then as soon as it came, it made a strong piercing, but then in a couple of hours, it took a momentum candle from here. So this is one area where the market is expected to provide significant support. All right. And this is almost like 400 points away. So no, sir, I need something more in between. Then I would say rejections. This momentum candle, this level would be a good level of support. We are talking positionally. I don't think we should be drawing this many things so close. It's okay. We need 400 points gap because we are talking for the entire May month, not for tomorrow, right? For tomorrow, yes, that line that I have just drawn would make more sense. But then our interest is not for tomorrow, it's for the month. So this is a good range for positional thing, and where we can see some sort of changes happening. Here there is a strong support, here there is a momentum candle passing through, there is support. Yeah, this would be my next level of interest. Okay, and where else? This would be another point, because this is where see how I am arriving at it is the length of the candle. You look wherever the market has made a very significant move, either on upside or on downside, like say 300 points, 400 points rally in the whatever time frame that you're considering. That is the momentum candle. You can see significantly the other candles are smaller, and this is the largest candle. So the peak of this candle, I am just tracing it, and then I am seeing a good length of consolidations, and then support happening over here. Here again some support is happening. So this proves to be a very good support zone, because not only the momentum started from here, many times there was secondary momentum candles, and then again every time it is reaching here, you see the length of the candles, and then you see the support that it offered over here. So all the major decisions are happening around this level, that is around 46, 42. And one more level that I might be considering is over here. Okay. Maybe I can keep the spikes as well, because here is where a lot of consolidation is happening. Here, 1, 2, momentum candle taking a lot of consolidation, rejections here, support here, support here. So this is a good length. So 45, 658. Now I'm going to draw this as the, note these as the downside targets. Downside targets is 46, 966, 46, 681, 46, 407, 46, 042, 45, 658. So these are the targets on the downside for Bank Nifty positionally. Now let's also explore the upside targets. So upside targets, if immediately what the market would like to do, get back into this channel, and here is where the rejections are happening, some sort of change of multiple things. Here is a gap, here is a rejection. So this would be my point of interest, where there are a lot of consolidations and support happening, would be my first level of target. And next, where I can expect is over here. Yeah, this is a good spot, and there is also a gap. So this would be a next good area of resistance. And this is the beginning of the gap, and there is a momentum candle over here. Support is happening. Should we consider this? Yeah, I think that's a good area. I think we should stick to this. Yeah, this is one good area. And slightly pull it up, because 1 hour candle can go to the body level. Here is the body, so I'm going here. And then I'm seeing the rejections happening over here. There is a spike. Okay, here we can take it, because middle of this momentum candle, middle of this downtrend, second candle confirmation, rejections, all are coinciding. This will be a next level of support, resistance. And obviously, this is where perfect it is, because here is where the rejection, here is where the piercing of both the momentum candles happening. So this would be next. So how many targets we have? 1, 2, 3, 4, 5. Yeah, this is good enough. Maybe if you want, we can also draw a sixth one, but then you will be asking for downside, you give only 5 targets, and upside you're giving 6. So for that reasons, I'm not giving. Okay. All right. Let's write down the upside targets now. So what is the first target? 47,760, 48,313, 48,717, 48,717, and then 49,178. And 49,660. So these are the targets. And is it possible for these targets to be achieved? Yes, because election developments are there. A lot of things are happening in the Indian market. Political news are coming. Elections are going on, and many developments are happening. And bank results, companies publishing their results, all could significantly make or break decisions in this market, which means all this are potential moves possible uh, for next 20 days. So keep this. This is the Bank Nifty target, and this is the Nifty target. So you can pause the video and then take screenshot of this, or make a note on paper, put these levels on your charts, and then see how the market is reacting around these levels, right? And if you have any questions, any comments, please do feel free to put it in the comment section, and I will be more than happy to answer them all. And if these levels are broken too fast, then I will be posting another video, fresh outlook you can take from there on for the June month. All right. So good luck, everyone. All the very best for the trades starting from Monday tomorrow, which is 13th May. All the best. Take care. Bye.